Hi, Paul Gerard from Price Accounting Services here to introduce you to our investor channel where we're going to look at all things to do with investing, however, not that of actual investments. Okay, we're not here to flog or spruik investments. We're here to talk about the tax and accounting consequences of being an investor. So we're going to break that down into loads of different videos. And the first of which today is really the end result, and it's the investor accounting one, where we're not saying accounting in the sense of debits and credits, but more in the nature of the records you need to maintain and produce and provide us. Because at the end of the day, if you give us very good reports and we can just pull a few key numbers out, the costs are very different to that of very poor records where we need to perform calculations, extract information, and keep going back to you and asking for further information. So I'm going to arm you with the knowledge you need. So one of the first things you need to have is CGT records. And here's where I'm going to start by saying all brokers are different. So many people these days use low-cost brokers, the likes of Self-Wealth, CommSec, AussieX, and the consequence of doing that is often demonstrated in the annual reporting that you get. So, and again, I'm going to unfairly target AussieX here and say their CGT reports are a perfect example. They don't do them at all, full stop. Okay, so what you get with their reporting is an annual transaction summary of all your buys and sells, and you can get that in Excel or PDF. Okay, and you just download it. It's pretty straightforward. But if you bought the shares in a prior year, it's not showing. If you made a profit or loss, it's not showing. There's some consequences to that. So you need to then maintain a flowing and continual record. And notice that emphasis I placed on flowing and continual, because not only do you need to calculate the capital gain on a particular sale, you need to then make a choice as to possibly which parcel you sold when you do sell. So I'll use the example, you bought 50 shares last year in CBA, you bought 50 this year, and then you sold 50 this year. Which 50 did you sell? So you need to allocate the cost of the original one you're selling to the sale and make that choice. And the ATO will expect to see that you've then carried that information forward so that a subsequent sale uses the correct cost when that package portion is sold. Okay? So CGT records, that's the first thing we need. We want to see 3 numbers. Now, your records may or may not extract them. So if I tell you what we need, again, this is where it gets cheaper. So we need 3 numbers. We need profits on all transactions. So you can have 100 sales, it's fine. Summarize into 3 key numbers. Those involving a profit where the shares were held for greater than a year is 1. Second is shares sold for a profit under 12 months. And the third one is shares sold, when I say shares, I'm talking any investments sold for a loss. Okay? Those 3 numbers are important. Don't worry about adding and calculating discounts and all those things. That is our job. Okay? There are other things that affect it. So we just need those key numbers, those 3 key numbers, but ideally don't just give us 3 numbers. Give us your calculations where you determine that, okay? We also need your income details. Now, again, here's where I'm going to focus on CommSec AussieX because their income reports are very poor, but very common to what you get from brokers. Their summary includes all receipts of money from the 1st of July of one year through to the 30th of June of the next. However, not all income is taxed that way. And I want to explain that. So CommSec AussieX call it dividends income. And there's a difference between dividends from a share and that of an ETF or a trust. Many people think of them as one and the same, and they are far from different, far from the same, okay? So with dividends, they are generally cash-based, and whether you receive it as a DRP, so if you give a dividend reinvestment plan, it's still income, that is then used to buy further shares. So it'll still should appear on the report, and if it doesn't, we need to know about it. But your dividends are cash based, so pretty straightforward. We can use the CommSec AussieX type of reports, no problem. But when it comes to ETFs, it's very different. There's timing differences. And we've got a better video later on in this channel concerning the additional tax complexities surrounding ETFs and managed funds, and I would strongly recommend you read it. But for now, let's just deal with that difference in timing. So typically for an ETF or a managed fund, we need the tax statement issued by that fund. Okay. Now, strangely enough, let's use the example of VAS. VAS pays a distribution of income 4 times a year, and it's paid on an arrears basis. So you accrue your entitlement, then it's paid afterwards. So, for example, if you hold VAS on the 30th of June 2022, you will receive in late July or early August, sometime around then, a further distribution of income which relates to the 30th of June 2022. It is the September period, December period, March period, and June period amounts, those 4 amounts, which add up to equal your tax statement, not the cash basis shown in the AussieX reports, which will show the prior 30th of June and the other 3. So watch that. We commonly see that. And the other reason we need the tax statements is the tax statements show the detailed breakdown of the tax components of a distribution. Unlike a dividend where it's just income, franked income or franking credits, with a trust or ETF distribution, there's various elements. Again, look for the other video on that where we explain it in far greater detail, including examples. Okay, so when it comes to investor accounting, I want to leave you with some guidance and help. Now, there are some software options that can help you if you do a large number of share investments. When I say a large number, even just a modest amount. And we're seeing more and more clients using this for the likes of, I'm going to throw 3 on the table right now. So for crypto investors, we strongly recommend Coinly. The ATO seem to use Coinly themselves to assess client data for undeclared income. The reason I say that is I have seen instances where the ATO's queried undeclared gains and losses, and it's not just the transactional nature where they can identify you sold some, etc. They seem to know what the profit and loss is, and the numbers they use on 2 occasions I've seen are absolutely identical to that of the client's Coinly. So either the ATO's process is so good that it's absolutely identical, or they're using Coinly. So I don't know, I suspect they're using Coinly. So crypto investors and owners, traders, Coinly, okay? And then it's simple, 1 pager. So 1 double-sided page of income deductions, etc. Okay. For general share and ETF, etc. investors, I do recommend ShareSite. Now, ShareSite is a subscription-based resource which sucks the data from the registries and your investment and your HIN, etc., and it compiles a summary of all the breakdown, and it deals with corporate actions and all sorts of things, tax elements. Very good. However, it does come with a flaw, and I want to explain that right now because those of you who have ShareSite may not be aware of this. Okay. And I saw it with one client with a very substantial CGT issue, and he prepared his tax return for the year end of June 2020 on the basis of his ShareSite CGT report, which lets you choose a CGT optimization method, and it says minimize CGT. Sounds good. Who wouldn't do that, right? Unfortunately, when I looked at his raw data, it certainly did minimize the CGT, but it ignored other things. So, for example, it sold off, or it allocated as sales, the shares which produced the least CGT. But he could have sold other ones, but it didn't think that through. It just said, I'm going to pick the ones I think that will produce the less gain. We found on review that by changing the ones it thought were worth selling and picking ones he'd only just acquired, it gave him a bigger CGT discount on the ones that it didn't sell. And in his case, the amount was $400,000. So what we got him to do was to go back to his ShareSite data and manually change. So he used the CGT optimization method to identify what gave the best method that he thought was best. Then he manually corrected it and allocated it. So in the 2020 year, he did have a slightly higher capital gain. It was about $1,300, but he saves $400,000 in the following year because in the August-September, he was able, at the time we were planning it, we were able to recalculate so that he was able to immediately take effect of a 12-month CGT discount and realise his profit, because he wanted out. He wanted to lock in his profit. So good lesson there, and I hope those of you who use ShareSite take that on. Don't blindly just assume. Carefully review the data. And the third software option is probably more so for trust. So those of you who have investment trusts where you do have some share ETF type holdings, I will strongly recommend BGL Simple Invest. It is a very robust and very good software system based on BGL's very good SMSF software. We support it. We can assist with cloud support. It is the bee's knees. Okay, simple as that. It's easy to use. We can talk you through the process of setting up and how you invite us, and then I will argue it will almost entirely do your accounting for your trust without you realizing you're an accountant. That's how good it is, okay? Yes, there's some year-end cleanup from our perspective, but it's not much, and it really keeps the costs down. And I believe from the 2022 year, it even generates a trust tax return if we are able to do it. It doesn't do it for the client, but it does it for our version on our side. So terrific product and a great way you might even save some costs. So I hope that's helped you to learn a little bit more about investor accounting. Check out some more of the videos in this channel. You'll find them very helpful, and we welcome any calls, questions, inquiries for those who have them. Cheers. Thank you.